Ihr Lieben, herzlich willkommen zu einer neuen und spannenden Folge Marc spricht mit Peter Schiff. Er ist amerikanischer Ökonom, Finanzexperte und natürlich Investor. Vor allem ist er dafür bekannt, dass er 2008 die Finanzkrise vorzeitig erkannt hat und natürlich als großer Kritiker von Bitcoin. Mit dem sinkenden Bitcoin-Preis hat er natürlich momentan einen Lauf und fühlt sich bestätigt. Und ich bin ganz besonders stolz, dass ich den legendären Peter Schiff zum allerersten Mal auf einem deutschsprachigen Kanal euch präsentieren, euch vorstellen darf. Das Interview ist natürlich wie immer mit deutschen Untertiteln versehen und am Ende werde ich natürlich eine Zusammenfassung machen mit den Punkten von Peter und meiner Meinung dazu. Leider war Peter Schiffs Videoqualität nicht so gut oder auch vielmehr das Internet so, dass nach kurzer Zeit das Bild leider abgebrochen ist. Deswegen habe ich ein Standbild, aber der Ton ist wie gesagt da. Und wenn ihr zum ersten Mal bei mir auf dem Kanal seid, freue ich mich natürlich, wenn ihr das Video kräftig teilt, wenn ihr ein Abo dalasst, die Glocke aktiviert und natürlich mich weiterempfehlt. Also viel Spaß mit Peter Schiff. Welcome to a new episode of Deep Dive with Peter Schiff today. It's an absolute honor having Peter Schiff today on my show. It's the first time on a German-speaking YouTube channel. And before we dive into specific topics, welcome to my show, Peter.
Thanks, Mark, for having me on your show.
Yeah, it's a blast actually, because I know you for 15 years. I saw you on CNBC like before the Lehman Brothers crash, and you nailed it actually back then. But before we start, please tell the audience something about your background.
Well, I mean, I have a background, I guess, in finance. I've been involved in the money management brokerage business pretty much for my entire career, going back to when I got out of college in the late 1980s. Started my own brokerage firm around 1996, and I've been doing that ever since. Although now I'm more in the asset management business. I sold a broker dealer a few years back and focus on asset management. But I also spend some time doing my podcast, The Peter Schiff Show, trying to educate people about free market economics and a lot of the mistakes that have been made by major central banks and governments. I do encourage people to invest in gold through a company, Schiff Gold, that I started some time back as well. But mainly asset management right now. Like you, I've authored several books, all of them New York Times bestsellers, although I haven't written a book recently. My last book, The Real Crash, America's Coming Bankruptcy, I think was a 2013 book. So I've mainly been communicating through social media, through my podcasts, or maybe through Twitter and YouTube and places like that. At some point, I'll write another book. I'm just not exactly sure when. They take a lot of time, as you know, to write these books.
True.
And, so I've got a lot on my plate.
Yeah. Yeah, it's definitely worth following you on Twitter, for example, and I will put all the links in the description beneath the video. But before we dig deeper into the topics, one question. Do you have any German roots?
Well, my name, right, is German. Schiff means boat. I'm not sure if some of my ancestors were in Germany. I know I have Russia, Poland, whether anybody was in Germany at some point. All my grandparents rather came to the United States around the turn of the 19th century. So I was the second generation born in the United States. My father and his sisters were the first. So I'm sure I've got some German ancestry in me somewhere.
Okay, so hey, next time we do this interview in German, I think, huh? What do you think?
Well, no, I don't speak in any Deutsch, so.
Oh, that's very good, actually. Okay, alrighty. So you're in the business for over 25 years now, and right now, I think you agree, we have very challenging times right now. I think there's so many crises on the horizon, and it's a crazy time right now. So let's start with your macro picture. Where are we right now?
Well, you're talking about the entire world or the United States?
let's start with the big macro picture, with the big picture, the world, and then perhaps let's get down to the States and Europe.
Yeah. Well, I think, well, first of all, the United States, Europe, Japan, all these major central banks have been making the same mistake.
Yeah.
Just a question of the magnitude of the mistake. But, you know, you've got a German audience, so to focus a little bit on the ECB, you know, if you recall when Mario Draghi was at the head of the ECB, his main concern was that there wasn't enough inflation in Europe. Yeah. And he constantly said, we're below 2% and we need to get close to, but not 2%. He always said, look, we don't want 2%. We want to get 1.999. You know, he said, we can't touch 2%, but we got to get really, really close to 2%. And apparently for years, Europe wasn't close enough. If it was 1.5% or whatever it was, this was this major problem that the ECB was determined to solve. And at the time, I was pointing out how ridiculous this was. And I had wished one of the reporters would have asked Mario Draghi, why? Why is it so important that the cost of living go up by 1.99%? Why can't it go up by 1.5% or 1%? Or why can't it go down? What would be so terrible if the cost of living actually went down 1 year? Is that a disaster if food got cheaper, if energy got cheaper, if education, if healthcare? Wouldn't that be a good thing if all the things we needed to buy were less expensive instead of more expensive? And why are you trying to force a higher rate of inflation on the European people? It made no sense. And in fact, if you go back to the roots of this 2% inflation mandate, it wasn't to get to 2%. 2% was supposed to be the ceiling. If they got to 2%, it was too high. So it was just, hey, stay below 2%. It didn't mean that 1% wasn't enough and you had to get it up to 2%. 1% was fine. 0.5% was better. Just keep it below 2%. Well, the ECB turned the mandate on its head and it turned the ceiling into a target. And why did it do that? It was all a lie from the beginning. The reason that the ECB did quantitative easing, the reason it kept interest rates in negative territory was not because they had to save the Europeans from a cost of living that wasn't rising fast enough. It was all about bailing out reckless European politicians, bailing out the Italians, bailing out the Spanish, bailing out any government that was running a big deficit that didn't want to have to come to terms with the reality of having to cut government spending. And so in order to enable the profligacy of a lot of European countries, they kept creating inflation. They kept doing quantitative easing. And all the while, I was warning that this was going to backfire, that eventually consumer prices would explode well above 2%. And then the ECB would be in a predicament because it would be unable to return inflation to 2% without completely destroying the bubble economy that had been inflated, because now all of these governments would be forced to make even deeper cuts to government spending than the ones that the ECB spared them from making all the years that it was, doing its quantitative easing program.
Yeah. You have been very vocal about the dangers of inflation. So do you think we've seen the worst already, or do you think the worst is still to come?
No, the worst is to come. And I'm actually surprised, to be honest, that the Germans have let the Europeans get away with this. I mean, where was the Bundesbank? I mean, why weren't they objecting to this massive monetary inflation by the ECB, realizing that there's a lag in this monetary policy, that just because they're printing all this money and you don't see an immediate rise in consumer prices, it doesn't mean that that rise isn't going to eventually happen. And by the time it does, it's too late to put the genie back in the bottle. I mean, the Germans had a horrible experience with hyperinflation during the Weimar Republic. They don't want to relive that experience again with the euro, but there is a threat now that that's exactly what's going to happen.
Yeah, we have now 10% inflation, and I don't know what's your take about the inflation in the US. Did we see the peak inflation there, or you think it will come back in 2023?
No, we're nowhere close to the peak in the United States, and the U.S. inflation rate is actually a lot higher than what the government acknowledges with the official statistics. But what is ultimately, I think, going to happen is interest rates in the Eurozone are going to have to go much, much higher. And when that happens, there is going to be a turn in the euro. The euro is going to start to rise against the dollar, and that will help mitigate inflation in the Eurozone. It's not going to bring it back down to 2%, but at least a euro that strengthens against the dollar will help. But when the dollar starts to fall against the euro, that's going to push the U.S. inflation rate much higher. And it's not just the euro that the dollar is going to fall against. It's going to be against pretty much all the currencies in the world. And in fact, the euro will probably continue to fall or fall against a lot of the emerging market currencies, even as it rises against the dollar. But I think it's these Western countries that have done all the quantitative easing, that have kept interest rates so low. These are the countries that are going to experience the most inflation and the largest reduction in their standard of living. As far as what happens in Europe, will the Eurozone disintegrate? Will a lot of these countries break away? Will, the euro go away? Will the Deutsche Mark return? I don't know. I mean, a lot of problems lie in the future. The experiment with the euro was always flawed. I talked about it from the very beginning 20 years ago.
Yeah,
that
true.
It wasn't going to work because of the moral hazard implicit in the fact that you have so many countries that could run big deficits and push off the cost of financing them on another country. I mean, Germany really got, the raw end of the deal. As much as the Germans thought this was great, we have more markets that we can export our products. That was, the wrong way to look at it. I mean, you don't want to export just so you can export. You export to pay for your imports. You don't export just to give away your products. You want to use the money you earn from exports to pay for your imports. But Germany had a long history of responsible monetary policy, of fiscal prudence. But a lot of the countries in Europe did not. Italy and Spain, France, a lot of countries there, they had a long history of budget deficits, inflation, depreciating currencies. And a lot of people thought, well, the euro is going to be like the Deutsche Mark. It's not. The euro is like the lira or the drachma. That's the problem.
Yeah. Yeah, the thing is, and we're brothers in minds, because I'm a strong opponent of the euro since the beginning, and I addressed it also in my books that it will fail because all monetary experiments, monetary unions failed at the end, and the Bundesbank became to the Reichsbank 2.0. You see, it's the same like 1923 with the hyperinflation, the Weimar Republic. So right now we see big problems in Europe, and I don't think the ECB can raise the rates very high, because if they raise the rates too high, I think Italy or Greece or Spain will get in trouble. Don't you think so?
Yes, they're going to be in trouble. And either they have to deal with the political reality of having to cut government spending dramatically, or they've got to pull out of the Eurozone entirely and go back to their own currencies, which will be an even bigger disaster because then they'll have even more inflation. But, that would be good for Germany. I mean, you can't keep, carrying the weight of these countries and shouldering the burden of financing their deficits and giving their politicians, an easy way out to promise voters something for nothing. So the ECB is going to have to push rates up and just allow the consequences to play out. But of course, the Federal Reserve has to do the same thing over here. I mean, we don't have the threat of states leaving the union, although I think a lot of states would probably like to be able to leave the union, like they did prior to the Civil War, although that didn't work out that well for the Confederacy. But we're going to have a lot of problems too, because if the Federal Reserve were to allow interest rates to rise to a level that would be able to return inflation anywhere near 2%, it would cause the same type of problems, because now the U.S. government would be forced to dramatically cut government spending on things like Social Security and Medicare, not in the distant future, but right now. And of course, I think if interest rates were allowed to rise to where the market needs them to be, the U.S. government would really have no choice but to default on its treasury debt. There is no way the U.S. government could pay interest on its debt, just like there's probably no way Italy could pay interest on its debt. If the debt went up, they would have to restructure. the same thing would happen with the United States. We have to deal with the reality of too much debt. The reason we haven't had to deal with it for so long is because the central banks were able to keep interest rates so low. They were able to keep monetizing the debt. And the reason they were able to do that is because they said we didn't have enough inflation. It was only because they can pretend that sub 2% inflation was not enough. That's what allowed them to get away with creating all this inflation. But now that inflation is the problem, they can't get away with it anymore unless they want to acknowledge that high inflation is a permanent way of life. And the minute they make that announcement, well, then you have a run on the whole fiat-based monetary system, because nobody is going to want to hold on to a currency if they know it's going to lose 10 or 20% of its value every year, as far as the eye can see. Everybody's going to reject these currencies, and they're going to buy gold, they're going to buy silver, they're going to get into real assets, and they're going to get out of paper.
Yeah. But right now we see a very, very strong dollar, don't we? And people rush into the dollar, rush into the treasuries because it's a safe haven right now, AAA ratings. And we see a dollar as strong as like 20 years not seen. So were you wrong when you said like 15 years ago on CNBC that the dollar is actually a Ponzi scheme and will fail? Or is it just a matter of time?
Well, first of all, they're not rushing into treasuries. In fact, today, the 30-year treasury is at a new low for the year. The yields are at a new high. They are buying dollars, but they're not buying long-term U.S. treasuries. I guess they're just holding cash or shorter-term treasuries. But when you talk about a strong dollar, it's only strong in relation to the euro or the yen. In terms of purchasing power here in America, it's very weak, because the dollar is losing value every day. Everything gets more and more expensive. So it's only on a foreign exchange basis that the dollar is strong. On a purchasing power basis, it's very weak. But the only reason that the dollar has been strong is the false perception that the Federal Reserve is going to win its fight against inflation. And every time we get a higher than expected inflation rate, the markets just think that that means the Fed's going to have to fight harder to win the fight, and interest rates are going to go higher for longer, and they buy the dollar. But what the markets haven't come to grips with yet is that the Fed is going to lose. Inflation is going to win. In fact, the Fed is going to surrender the fight because it's going to have to turn its attention to what it perceives to be an even bigger problem, which is either heading off a financial crisis or, if it waits too long, trying to bail us out of a financial crisis. Just like they just saw in the UK, where the British were hiking rates and all of a sudden they were going to blow up their pension system due to leveraged bond portfolios. And so they had to turn around and go back to quantitative easing. The same thing is going to happen in the United States. We have a much bigger debt bubble than the one that popped in 2008. And if the Fed raises rates, or they have raised rates, it's only a question of time before something blows up. We have more leverage than ever before. The whole economy is propped up based on cheap money, inflation, artificially low interest rates. It's a phony economy. And the minute you take away those artificial supports, everything that you built on top of it has to crash. So we cannot fight inflation without simultaneously destroying the economy that was built on a foundation of inflation. So when we really start to see the implosion, we're already in a recession. When it gets much worse, when we start to see bigger problems, the Fed is going to shift its attention and not focus on inflation. It's only worried about inflation now because it's a problem for the voters. It's a problem for politicians. So it has to pretend that it's going to do something about it. But if you remember the initial rhetoric coming out of Powell, Powell was only really willing to fight inflation when he thought he could do it without hurting the economy. He said we had this super strong economy, red hot labor market. And so because of this economic strength, the Fed had the leeway to raise interest rates and fight inflation because the economy was so strong, it could handle it. But if the economy is in recession or depression and we have a financial crisis, there's no way the Fed is going to turn a blind eye to that and just keep on hiking interest rates to fight inflation. In fact, the politicians won't allow it.
Yeah. So what do you think? When will the Fed pivot? You think it will be this year, next year, or will they go to 5%?
I think the markets are already finally starting to sense that the pivot is coming. look at the gold market. Gold's had a nice rally from the lows, and it doesn't look like it's going to make a new low. The dollar had a pretty big pullback from its highs. So it's quite possible that the dollar rally is over and the gold sell-off is over. And if that is the case, it means that investors are seeing through the smokescreen, at least a little bit, and recognize that the Fed is all bark and no bite when it comes to its commitment to actually fighting inflation. Yes, they've been able to go this far, but they're not going to go the distance because it would involve too much political pain, economic pain, bankruptcies, foreclosures. Investors would lose a lot of money. A lot of people would lose their jobs. All this is necessary. This is all part of creative destruction. It's all what the free market needs to do to purge the economy of all the mistakes that were made thanks to artificially low interest rates. The government and the central banks screwed up the economy dramatically. And in order to have a real recovery on a solid foundation, the free market needs to purge the economy of these excesses and these mistakes. And it can't be done without people losing money and losing jobs. This is all a necessary part of the process. But from a political perspective, nobody wants that. That's why we did QE for so long. That's why rates were so low for so long, because nobody had the stomach to allow market forces to correct the mistakes. So instead, the mistakes got bigger and bigger and bigger because they never got corrected.
Yeah. So you expect like a final melt up when the Fed pivots, and then we see like gold on a new record high and silver exploding and commodities going up? Or what do you think? Will the system survive after that, or will this be the final melt up?
I think this is the beginning of the end of the U.S. dollar-based monetary system, and the dollar's role as the reserve currency is going to come to an end. And I think that is a good thing for the rest of the world. In the short run, it's going to be very bad for the U.S. In the long run, it depends on how we react to it. It could end up being a good thing, or it could end up being a very bad thing. But in the short run, it's going to mean a much lower standard of living for Americans and a much higher standard of living for everybody else, in particular, people who live in the emerging markets that have been financing America's trade deficits, that have been producing all the stuff that we consume and loaning us the money to pay for it. But the way I think it's going to go down is, first of all, the markets are going to anticipate the pivot before the Fed pivots. So the dollar is going to start declining, and I believe that decline has already begun. It will accelerate. The increase in the price of gold has begun, and it will accelerate. But at some point, whether it's the market crashing or some bank blowing up or a hedge fund or maybe some state government, a municipality starting to default, I mean, something bad is going to happen, or it's going to be a big surge in unemployment, maybe a lot of layoffs. I mean, there's going to be some event that is going to precipitate the actual pivot that the markets had anticipated. And then when that finally happens, I don't think it's going to be, like a buy the rumor, sell the fact, where the Fed's going to pivot and then gold's going to sell off and the dollar's going to rally. I think that will just kick the dollar sell-off into a higher gear and fuel the move in gold, because I think there are a lot of people that don't want to preempt that. I think there's a lot of investors that are like waiting for a clear sign that the Fed has pivoted before buying gold, before selling the dollar. I think that's a mistake. I think it's better to have the guts to anticipate the pivot, because you're going to make even more money. You're going to get a better entry. But if you want to wait for an engraved invitation from the Fed before you buy your gold, you could do that. You're just not going to get as good a price as if you were to buy it right now. But I think that's going to happen. Now, the bond market, I think there it's going to be interesting, because I think the knee-jerk reaction to the Fed going back to quantitative easing will be the bond market rallies a bit, but then it's going to get killed. The bonds will get decimated by the Fed's pivot, especially the longer-term 30-year bonds. The only reason the 30-year Treasury only yields about 3.7, 3.8% right now, despite the fact that we've got 8% inflation, is because bond investors are confident that the Fed is going to bring inflation back down to 2% and that it's going to stay there for the next 30 years. That is a laughable assumption to make. Our national debt just hit $31 trillion. It's risen by $1 trillion in the last 8 months, but it's probably going to rise by $1 trillion now in about 5 or 6 months. And soon we're going to be adding $1 trillion a quarter based on the increase in debt. And during the next recession, the debt's going to explode. So we're going to have 40 trillion, 50 trillion worth of debt. And this is actually the tip of a debt iceberg because we have all sorts of unfunded liabilities that we don't even discuss. So the U.S. government is massively in debt, and it has no hope of repaying the debt. The only way out of it, other than default, is inflate. And so to think that inflation is going to stay 2% for 30 years is crazy. But once the Fed goes back to quantitative easing, even though inflation is still nowhere near 2%, and sends inflation into double digits, the bond market will crash. Yeah. Then, if the Fed really ramps up quantitative easing to stop the bond market from crashing, then the dollar will implode. But the Fed is going to have to choose one or the other. Does it let bonds crash, or does it save bonds and crash the dollar instead? It's not going to be able to save the dollar and the bond market. But of course, if the dollar crashes, then your bonds aren't worth anything anyway, because all your bonds are promises to pay dollars. So if the dollar crashes, it doesn't matter if the bonds don't, because the value of the bonds is still crashed, because all they are is, receipts of dollars to be paid to you in the future.
Yeah. Yeah, sounds like a nightmare, and I don't want to change with Jerome Powell and want to sit in his chair. So I agree with you. We see the end of Pax Americana, but what will come after the US dollar? What do you think will be the next world currency?
There won't be another one. I think, or I hope, the world will learn from its mistake. And, remember, the only reason that the world trusted the dollar was, number one, I mean, the United States was this massive economic and military power at the time of Bretton Woods. We also had all the gold pretty much in the world. I mean, we didn't have all of it, but we had most of it by far. And we were a massive exporter. We had all the factories, right? I mean, everything that was manufactured, automobiles, consumer electronics, it was all made in America. It wasn't made in Germany, wasn't made in Japan. I mean, it was made in America. And so everybody needed dollars to buy U.S. manufactured goods. And we had all the gold to back those dollars up. So the world went on this dollar standard because of America's position as the world's biggest creditor nation, the world's biggest net exporter, and because we had all this gold. And not only was the dollar backed by gold, but you could redeem your dollars on demand and get your gold. So the world was still on a gold standard. It was just on the gold standard through the dollar. The dollar was as good as gold. That was what they said. And so today, obviously, the United States is the mirror image of what it used to be. We're the world's biggest debtor nation. We have massive trade deficits. We have to import all the stuff we used to export. Nobody needs the dollars to buy American consumer electronics or American automobiles. All we export is agriculture, stuff that grows here that we can pull out of the ground. I mean, there are a few things, but America is not the industrial power that it used to be. And none of our paper is backed by gold. You can't get any gold for your dollars. It's just fiat. So when this system ends, I don't think that you're going to see the world just anoint another king of currencies. Like, okay, let's just use the euro. Let's use the yen. That's not going to happen. What we're going to do is just go back to what we had before the dollar, and that was gold. And, no country should enjoy the exorbitant privilege of being able to create the reserve out of thin air. Everybody should just go back to using gold. That's the only way to have real discipline in a monetary system, is to have a monetary system that's based on real money. And that's where we're headed. And so we're going back to gold. And if the central banks don't do it, private industry will do it on its own. We don't need a government to create currency. The free market could create a gold-backed currency whenever it wants. There can be multiple currencies backed by gold, especially digital currencies, using a blockchain, using the internet. We can cut out the middleman. We don't need governments to transact with one another, right? Gold was money long before the kings decided to adopt it as money. And when they did, they had to tax the public to get that money. And that's what should happen again. We should have money created in the free market. And then to the extent that we have governments and they need money to pay their workers, they can tax us and take some of that money that way. But they don't have to create the money. The money can come from the private sector. Government can collect tax revenue, which is the way it's supposed to be. Governments are not supposed to conjure money up out of thin air. That's where you have disasters. That's what they've been doing. And that's why we have so many distortions and malinvestments and all the problems can all be laid at the feet of the fact that governments were able to create money out of thin air.
Yeah, true story. Fiat is ending. What do you think? What's your time frame for this scenario?
I think it's happening. It's hard to say the speed. Look, 10 years ago, I was talking about this stuff, or 20 years ago.
I know.
And it's amazing that it's taken so long, but because it has, we're in so much worse shape than we were. When I was out there on CNBC and you were watching me in 2005 and 2006, and they called me Dr. Doom, I knew the problems that the Fed created in the housing market and in the economy with 1% interest rates. I knew the financial crisis was coming, but the reason that so many people in the mainstream didn't know it was coming, even though it was obvious, is because they didn't understand the mistakes that the Fed had made. And they still don't understand those mistakes. That's why when they made even more mistakes in the aftermath of that crisis by bringing rates to zero and doing quantitative easing, they thought the Fed solved the problem. I understood that they made the problem that they created even worse. All they did was postpone the consequences. And, we almost dealt with those consequences in 2020 with COVID, but we were able to kick the can down the road once again with another round of massive money printing and 0% interest rates. But at this point, you're talking about this massive problem that cannot possibly be swept under the rug. We're gonna be confronted with it. And, I think the fact that Europe also got to negative interest rates, that shows you how insane this was. And there really isn't room for it to get any crazier. They've kind of exhausted that. And now that inflation has reared its head in such a obviously destructive manner, that's it. The game is over. As I said, the only reason they were able to get away with it is because they pretended we didn't have any inflation. And so that gave them the room to create inflation, because the monetary policies that the central banks have pursued in Japan, in the U.S., in the United States, it's all been inflation. That's been their policy. Create inflation. Inflation has been the solution to every problem that they've been confronted with. Well, now that inflation is the problem, how do you solve that? When the only tool you have to solve problems is to create inflation, and then you've created so much inflation that inflation is now the problem, there's nothing you can do.
Yeah, true. Yeah, we see the central banks fighting, totally desperate to keep the fiat scam alive. And I'm a big fan of the competition of currencies as well. And a strong competitor in the last couple of years was, of course, the new digital gold, Bitcoin. And you're laughing because you on Twitter you are very, very strong vocal against Bitcoin, and you say it's a scam. So tell us, is Bitcoin a scam or is it a digital gold?
Hopefully not digital gold, right? Whether it's a scam or not. Look, a lot of people believe in Bitcoin. I know a lot of people who have totally been, taken in by it. And so for them, it's not a scam. It's a cult. It's not really a scam. They believe in it, but Bitcoin hasn't taken over for fiat currencies. It hasn't taken over for gold. All Bitcoin has done is made a lot of people rich who bought it early, and it's making a lot of people poor who bought it late. But it's just served as a speculative token that people collect and trade, and some people have made a lot of money trading them and selling them, but it hasn't replaced a fiat currency as a medium of exchange or as a unit of account. You don't go anywhere on the internet and see stuff priced in Bitcoin. People aren't, selling stuff for Bitcoin. No, where you see Bitcoin is traded on an exchange. That's where Bitcoin is, and people buy it and sell it. They don't go to the supermarket and buy their groceries and pay in Bitcoin, and they still pay in dollars, they still pay in euros. So it isn't acting as a medium of exchange. for commerce. It hasn't replaced gold as a store of value because it is no store of value. It doesn't store value. You can't store what you don't have. The reason gold is a store of value is because gold is a metal. The metal has value. Gold can be used in consumer electronics. It can be used in jewelry. It has all sorts of uses. And the beauty of gold is it doesn't decay. So you can hold on to gold for hundreds of years and then you can still use it in consumer electronics or jewelry. So it's an excellent store of value compared to maybe other metals that would tarnish or other commodities that would decay or rot. And it's, got a lot of value in a small area. So it's easy to store compared to other commodities that would be a lot more expensive to store. But Bitcoin hasn't served as a store of anything. It's just a speculative asset, nor will it ever be. So I don't think Bitcoin is a challenger to the monetary system at all. I think gold remains the main competitor to fiat currencies because gold can do what fiat currencies can't, which is be a long-term store of value. Fiat currencies are great as a medium of exchange, but they stink as a store of value. But gold can be as effective as a medium of exchange today. See, in the past, gold wasn't great as a medium of exchange. That's why we use copper. That's why we use nickel. That's why we use silver, because it was hard to use gold to buy small things. But today, with the blockchain, with the internet, it's very easy for any custodian to hold physical custody of gold and then tokenize it and then issue digital currencies that represent a portion of that bar of gold. And then those tokens can be traded amongst the people of the world quicker and at less cost than you can transact in Bitcoin. But there would be real stability in those tokens because they would represent actual gold. So they could be a store of value, but they could also be a highly effective unit of account and medium of exchange. So that is where we're going. Not to Bitcoin or the other 20,000 plus cryptocurrencies are all going to ultimately go away because they have no actual value. You have to be backed by something real. They're just fiat, they're private sector's version of a fiat currency. What backs up Bitcoin? Confidence. That's all. It's just confidence that people think it has value. It doesn't actually have value because you can't do anything with it. But if people think it has value, they're willing to accept it. They're willing to buy it. But when that belief changes, nobody will want to buy it, and then the price will be zero.
Yeah, I think the advantage of Bitcoin, for example, is that it's decentralized. There's no central bank behind it, or if you establish a token with gold backed, there must be a central company or a trust or somebody who takes control of it. And this is also a weak point, I think. And I'm a gold bug as well, Peter, don't understand me wrong. And I think Bitcoin has done a way better job in the last couple of years to explain young people, educating people about sound money and the fiat scam. Don't you think so? And don't you think that sorry?
Bitcoin has used that as a way to con people into buying Bitcoin. I mean, I think that to the extent that some young person has been educated about fiat money and now they own Bitcoin, they may end up back into fiat money. I think Bitcoin could end up doing a lot of damage to that cause because a lot of people have jumped from the frying pan into the fire by getting into Bitcoin. So I don't think that the fact that it's decentralized, while that's an interesting point, the fact that Bitcoin itself doesn't have any value, I think renders the whole decentralized aspect worthless. I think it's more important to have money that has real value. Money has to be a commodity. It's by definition the most marketable commodity. And I don't care if the SEC wants to define Bitcoin as a commodity. It doesn't have the characteristics of a commodity because it doesn't have a use apart from the fact that you want to use it as a medium of exchange. It has no real world use to give it actual value so that it can have any kind of relationship to any other commodities or goods and services that you need in order to have one of them serve as money. But the whole idea that the fact that gold needs a custodian means it won't work. We've used gold as money for 5,000 years, and the whole time there's always been a custodian. whether it was the blacksmith or a bank, somebody is holding gold, and it works. You know, the idea that you can't have a third party seems so ridiculous. Capitalism is based on third parties. Everybody trusts third parties. Insurance, the entire insurance industry is about third parties. Without confidence in a third party, you can't have insurance because it's the third party that pays the claim. And one of the reasons that third parties don't screw you over is because there's a value to reputation. You build up a reputation in the free market, and that goodwill is very valuable. And private companies will do what they can to protect that. I look at Brinks. I mean, Brinks has been storing gold for, 150 years, and they've never lost an ounce. You know, they pride themselves on that. So people have been trusting them for a long time. So there are third parties that you can trust to hold your metal. And then you can now have a viable medium of exchange. I'd rather trust a third party who cares about their reputation than just blindly believe that the world is just going to want my Bitcoin, because you could wake up one day and your Bitcoin have no value. I mean, that's not going to happen with gold, but Bitcoin can just be worthless. Nobody wants it anymore.
Yeah, but the third party, the people believe right now is the blockchain, the Bitcoin blockchain, and I think Bitcoin was the most successful investment in the last decade. It's actually, the dollar is in hyperinflation against the dollar, and your son Spence is a strong support.
You know, with any bubble before it pops, I mean, Beanie Babies were probably the best investment at one point relative to everything else. They obviously, in Holland, I mean, tulip mania. I mean, tulips were the best investment relative to everything else. I mean, at a snapshot in time, that's true. But if you look at where Bitcoin is now, at around 19,500, it was almost 70,000 at one point.
But
I mean,
Bitcoin
is lower than it was, I think, 2 years ago. But also, you've got to think about how much money was spent advertising Bitcoin in 2021, pumping it up. And it's still way down. I mean, to me, it was a mania, a blow off top in 2021. That was the end of it. And, the bubble has been popped. The air hasn't all come out yet. I mean, some of the air has come out, but the rest is going to come out. It's just a question of when.
Yeah, it's always boom and bust with Bitcoin. And for example, the tulips you mentioned, it's just a once in a lifetime occasion. It just happened once, but Bitcoin goes up, comes down, and it's like more bubbles than ever. But your son Spencer is a strong supporter of Bitcoin as well. And Bitcoin and gold share the same goal, actually. They want to replace the fiat Ponzi scheme. So do you see a world where Bitcoin and gold go perhaps hand in hand? I'm asking because Bitcoiners and gold bugs are actually doing the same job or on the same side.
Look, it's not a pure Ponzi scheme. It's kind of a hybrid between a chain letter, a pyramid scheme, and a Ponzi scheme. But I agree that there are people that own Bitcoin that share my philosophy of sound money and Austrian economics. In fact, a lot of people who own Bitcoin credit me for that decision because they learned about economics through me, and that eventually led them to Bitcoin. But, I mean, that's a mistake that they've made on their own. I mean, going down the wrong fork in the road. No, I don't think that they're both going to, survive
coexist
as the alternative. I think Bitcoin is going away, and so are the other currencies. And in fact, it's interesting because if you argue with like a Bitcoin maximalist, they'll talk about how all these other cryptocurrencies are worthless without realizing that the same arguments apply to their own Bitcoin. But for some reason, the other 20,000 don't have value, but Bitcoin does, when in reality, there's really no substantive difference between any of them. I mean, yes, you can point to small differences, but at the end of the day, none of these tokens have any actual real-world utility. All you can do with it is give it to somebody else.
Hmm. I agree with you. There are a lot of shit coins. I think Bitcoin is unique because it's sensor free. You can take it everywhere. There's value. It's limited. It's decentralized, and you can use it with Lightning. Some countries also adopted it already as a currency, like El Salvador, for example. But we will see. Time will tell.
Salvador, what a mistake that's been. I mean, they bought their Bitcoin at 60,000. So they're down.
Timing was bad. I agree. Yeah, I agree.
Nobody's using it as a currency. It was all just a hype to con people into buying it. That was all part of the 2021 mania. They sucked in some institutions that bought a bunch of Bitcoin. Look how much Bitcoin Michael Saylor bought. He borrowed money to buy Bitcoin. He's down over $1 billion on his Bitcoin. But and again, we've just started to fall. It's a long way down. Again, we barely got below 20,000. Wait till we get below 10,000. Wait till we get all the margin calls in Bitcoin. And, once Bitcoin is down that dramatically, look at the Grayscale Bitcoin Trust. That's down 80% from where it was a couple of years ago. 80%. It's gone from a 30% discount premium to a 35% discount. If the institutions were so interested in Bitcoin, why are they turning away a 35% discount? In fact, if you like Bitcoin so much, why buy it? Just buy the Grayscale Trust. You're getting your Bitcoin, for 65 cents on the dollar. But nobody wants it.
Yeah. So what do you tell your son Spencer when he invests his money in Bitcoin?
But he's a young kid. What does he know? He's 20 years old. He's
okay.
He's
okay.
I put out like a joke on Twitter one day, knowing that all the Bitcoiners would troll it. But I said, look, who do you want to take your investment advice from? A 19-year-old kid who's never had a job, or a 59-year-old man who's been in the financial industry all his life, and of course everybody picked my son. But
okay.
But you don't want to take investment advice from your kids. The kids should take the advice from their parents. Their parents have been around long enough to have learned a few lessons. There's some value in wisdom.
True story. So what's your perfect portfolio for the next couple of years? So what do you recommend the audience to own actually? It's not Bitcoin, I guess.
I don't own any Bitcoin or any of these cryptos. But you have to recognize that inflation is going to be here for a long time.
Okay.
Even if central banks can manage to reduce the rate, we're never going back to these sub 2% rates in anytime soon. In the foreseeable horizon of most investors, we're going to be in a high inflation environment and a rising long-term interest rate environment. So this is not going to be friendly to a lot of the asset classes that did well in an opposite environment. So when it comes to the stock market, you want to focus on value and dividends. You want to own companies that are earning money today. Not that might earn money in 10 or 20 years or 50 years, but are earning money right now. But more importantly, they're earning money in businesses where the consumers aren't going away. Because a lot of consumers are going to have to cut back because of inflation. And so if you are selling products that people don't really need, you're in a lot of trouble. You got to be in a business that is selling stuff that the consumer is going to buy no matter what. Maybe they'll buy a little less, but they're still going to buy it. And if you raise your prices, again, they're going to buy it. So you need pricing power, you need dividends, you need real assets, because that's what does well in an inflationary environment. Because inflation is a transfer of wealth in a way, other than it's also a tax, but it transfers wealth from creditors to debtors. People that own paper, people that own bonds are the losers from inflation. But if you own assets and the assets have debt, you're a winner. So you want to own real things. You don't want to own paper. I think you want to be away from the United States because I think the United States is in a lot of trouble from losing reserve currency status. I think the American consumer is going to be buying a lot less. But who's going to buy what the American consumer is too broke to afford? Well, it's a lot of the emerging market consumers, Southeast Asia in particular. There's a lot of countries that are going to start buying what Americans can't afford, and their currencies are going to appreciate to make that possible. So investments in those emerging economies are going to do very well. So you want to have an overweight in the emerging markets and an underweight in the developed markets. You want to have a lot of commodity exposure, whether it's agriculture, industrial metals, precious metals, energy, all that stuff is going to be more and more valuable in the environment that we're in. And you want to own gold. You want to own the mining stocks. If you look at my personal portfolio, I'm about 50% in mining stocks. And in order to keep that weighting, I had to buy more recently because they went down so much. So I had to add to my portfolio of mining stocks. But, I think these stocks are going to go up not just 10 times, but 20 times, 50 times. Some of these stocks, I think, will go up 100x.
Wow.
Because I think the price of gold is going to go significantly higher in a world where it's remonetized. And so I think buying these companies is going to be one of the best speculative investments that people make. And, the senior producers, they're all paying dividends. I mean, they're not the highest dividend payers right now, but at least they're paying dividends. But they're going to pay much higher dividends in the future when the price of gold really takes off and then continues to rise. So I think there'll be a source of income that a lot of people will be able to rely on, because it's going to be hard for most people to maintain their standard of living because they're not going to be able to grow their incomes as rapidly as the cost of living is going up.
Yeah, true. So what's your favorite mining stock right now?
Get into individual stocks.
Okay.
Per se, in fact, I hired Adrian Day to manage a portfolio for our clients. He manages my mutual fund, the Euro Pacific Gold Fund. If you live outside the United States, you can't buy my gold fund, but you can open up an account at my asset management company, Euro Pacific Asset Management, and Adrian will manage a portfolio for you of the stocks that he likes the best. He's been doing this for 30, maybe 40 years, so he knows his stuff. Very few people do. I mean, not many people have been around as long as he has, and the best and brightest, have been, in technology stocks, or whatever. They're not in mining sector. They're not geologists. So Adrian really knows the industry. He knows the companies, the management teams, the projects. And so I think he's positioning our clients to make the most of what's going to be an historic bull market. The big bull market in gold stocks was in the 1970s. That was the big one. And, that's when the U.S. went off the gold standard. And that's what pushed gold prices way up. Well, when the world goes off the dollar standard, that's going to be the next catalyst for a meteoric rise in the price of gold. So the price of gold in the 1970s went from $35 to $850. So think about the magnitude of that increase. I think we could have something similar, only we're moving up from, 1,000. I mean, right now gold is at, 1,700 and change. But if you were to apply the same type of percentage gain, I mean, you're talking about a gold price well above $10,000. I mean, 20,000. I mean, there's no point in talking about it being that high because it seems so ridiculous. But, I remember when gold was under 300 and I was going on CNBC predicting it would go to 1,000. That prediction seemed ridiculous. Gold will never be 1,000, but of course it went a lot higher than 1,000.
Yeah, true. Yeah, so you said the US will be in trouble in the next couple of years, and you moved to Puerto Rico actually. So what's the situation over there? I'm asking because I have many clients who want to leave Germany. So what are the major benefits, the advantages and disadvantages of living in Puerto Rico? And how is it back there?
You're lucky. You guys don't have to come to Puerto Rico. You have a lot of other places that you could live.
Yeah.
And so I would suggest looking at those other places, having lived here for almost 6 years. But
cool.
And it's a nice place to vacation. I live in a beautiful beach, and so come on down here, especially in the winter in Germany, it gets pretty cold. We've got very, very nice weather here during the winter. But Americans are in a unique position, and it's a uniquely bad position. It's one of the major drawbacks of being an American. And that is when Americans move out of the United States, it doesn't matter where they live, the U.S. government wants its cut. You have to pay U.S. income taxes no matter where you are. Even if you're living in a place that has no income taxes, you still have to send income taxes to the United States. In fact, there are people who are American citizens who have never even been to America. Maybe they just became a citizen because, well, their parents, or maybe they were born here, but parents were here on vacation and they got born, but they haven't really been to America as an adult. They still owe taxes if they haven't renounced their citizenship. So it's really like an albatross that Americans wear around their neck, is this U.S. citizenship when it comes to tax obligations. I mean, you've got Americans, let's say, that are living and working in Dubai, and they're working right next to colleagues that are German. The German colleagues pay no income taxes, and the American they pay taxes, even though they're not in America. They're not getting any of the benefits supposedly that you get from paying taxes. They're living in a different country. So Puerto Rico has a unique relationship with the United States. If you are American and you move to Puerto Rico, you don't have to pay U.S. income taxes. You only have to pay the Puerto Rican income tax. So that's the reason that Americans come here, because we can't get this deal anyplace else. And so that's one of the reasons that I came. I mean, there are other reasons, but that's one of them, was the much lower tax, because Puerto Rico has tax breaks to get you to come here that lower their own taxes. So we have a 0 capital gains tax and a 4% income tax. But, I initially thought that would be very appealing to anybody. I mean, because anybody can come here, because I thought it would be a great place to be, even if you weren't American. But Germans can look all over the world to places with lower taxes. They're not just restricted to just a few places. Now, of course, I could have moved. There's the Virgin Islands, there's American Samoa, there's a few other places, but Puerto Rico was the only real place to go, right? I mean, there's 3 million people here. San Juan is a, significant city. So you're not, out in the complete boondocks by coming to Puerto Rico. But it's not without its downfalls. There's trade-offs. There's pluses and minuses about being here.
Always. And Mike is also there. So, hey, that's great, actually. Yeah. I asked some people on Twitter about questions for you. And for example, Evan G asked, what do you think about the COMEX?
Exchange where, metals are traded and
or manipulated.
Look at the price of gold and they think it must be manipulated. Look, I don't think the powers that be are smart enough to pull off the manipulation and keep it secret. I just think that investors just don't get it. I mean, just like, look, they didn't get it before the subprime market. I mean, I remember when we were watching that market and we were short these bonds, and even after some of the subprime lenders had blown up, the bonds weren't going down. I was like, well, what's going on? I mean, how are these bonds not falling? Well, they eventually fell. But people just were very slow to understand what was going on. And there's so much misunderstanding out there among the major players, I mean, the real money, that I think it's more ignorance than manipulation that is responsible for gold not being much higher or the dollar not being much lower. But, where I think you could ultimately see a problem at the COMEX, and I've been talking about this for years and it hasn't happened yet, but that doesn't mean it won't happen, would be a failure to deliver. Because when people are trading contracts on gold, people forget that when you sell a futures contract, you are obligated to deliver gold. You're selling gold, and you're supposed to deliver it. You just don't have to deliver it today. You deliver it when the contract expires, right? So if I go out now and I buy December gold, I'm supposed to deliver 100 ounces of gold for every contract I sell, at some point in December. But what the shorts end up doing is they don't deliver the gold because they don't have it. They just buy back their contract, right? And they close the position. Well, what happens if a number of people who get long, and maybe it's a government, maybe the Chinese government or somebody decides to go on a COMEX and take long positions in all these gold contracts, and then instead of cashing out their contract or rolling it into a future month, they just send a notice to the COMEX that they would like delivery of their bars, and here's the address where they'd like their bars shipped. Well, now the COMEX has to send a notice to the shorts to say, hey, you now have to deliver this gold. You've been assigned this delivery, and so here's where you need to send your 100-ounce bars, and this is the delivery form that they need to take, and you just have to get your gold delivered. Well, now they have to run and buy the gold. Well, what if they can't get it? What if the physical is just not there? So that's the problem, because the supplies of physical are much lower than the number of contracts that are trading. And so then what's going to have to happen? The price is going to have to skyrocket because a lot of these shorts are going to have to scramble. Look, if you remember during COVID, the price of oil went to negative $30 a barrel. Why did that happen? It was because the people who were long oil were being forced to accept delivery of the oil because but they didn't have any place to put it. Nobody needed it. And so they had to pay people to take those contracts off their hands. And so the reverse situation is going to happen in gold, where it's going to be the shorts that are squeezed. In oil, the longs got squeezed, but in gold, the shorts are going to get squeezed. They are going to have to scramble to get physical gold to deliver, and it's not going to be there. Now, of course, what may end up happening is a default, which would rock the COMEX, because now the shorts are like, well, look, we can't deliver. And so now the longs are being told, you're not going to get the gold that you were promised. And that's a major event. You get a bankruptcy, a default of the exchange. So, look, something like this is going to happen eventually.
Yeah.
And I'm just surprised it hasn't already happened. But, you could just go in there and buy a bunch of contracts. I mean, that's what the Hunt brothers tried to do with silver, right? They tried to corner the silver market. They tried to take delivery of silver futures. And the price went up to $50 an ounce for silver in 1980, or whatever the exact date was. I mean, $50. I mean, it's only $20 now. But think about how much prices have gone up in the last 50 years. And silver is a lot lower than it was at that point. But maybe at some point, somebody will succeed where the Hunts failed. I mean, and really drive the price up dramatically.
Yeah, we will see, definitely. Yeah, thank you, Peter. For the end, I would like to ask you some rapid fire questions. What do you think? Recession or depression, or both?
So that's a big point. But I do think that historians will ultimately call this a depression. They call what happened in 2008, 2009, the Great Recession, because that was the worst downturn since the Great Depression. I think what we are in the early stages of now is going to be much worse than what we experienced in 2008, 2009. So I don't think a greater recession will do it justice. I think in many respects it will be worse than the Great Depression, especially because of inflation. Because one of the positive aspects of the depression was that consumer prices went down.
Yeah.
And so that eased the blow. And in fact, that's one of the mistakes that politicians make. They go back to the 1930s and they say, hey, we had a depression in the 1930s, but we also had falling consumer prices. And they make the illogical conclusion that the depression was caused by falling consumer prices. No, it wasn't caused by falling consumer prices. It was the other way around. It was a depression that helped bring about the decline in consumer prices, but the decline in consumer prices was actually a buffer that actually helped people survive the depression because it brought down the cost of living.
Yeah.
But to say that, falling prices caused the depression, therefore we have to stop prices from falling to prevent recessions, that's like saying that wet sidewalks cause the rain. And if we could just keep the sidewalks dry, it's not going to rain. I mean, it's nonsense. They had it ass backwards. And so what's going to happen this time is we're going to have a protracted economic decline. But on top of that, you're going to have very high inflation. So for the average person, this is going to be much worse. I mean, remember, in the 1930s, let's say 25% of the people lost their jobs. That's a lot of people to be unemployed. But that means 75% of the people didn't lose their jobs. For those people, the depression was pretty good because they didn't lose their jobs, but the cost of living went way down. Yeah. And also, stock prices came down, real estate prices came down. People didn't lose any money, money gained value, they could buy stocks cheap. They could buy real estate cheap. But now, if you have massive inflation, even the people who don't lose their jobs are going to suffer because they're still going to have a paycheck, but the paycheck's not going to buy very much.
Yeah. You think we will see hyperinflation?
So the odds of that are much greater now than they were 10 years ago. But even if it's not hyperinflation, Weimar Republic style or Zimbabwe style, it can still be hyperinflation if you define it by maybe 10% inflation a month or something like that, right? It doesn't have to be, where you need millions of marks in a wheelbarrow, right, to buy a cup of coffee. It doesn't have to be that bad. But if prices go up tenfold in a matter of a few years, I mean, that's, that could still be considered hyperinflation. So we could easily see that. We could easily see money losing 70, 80, 90% of its value in a condensed period of time. I mean, if you look at the last 100 years, fiat currencies have lost 98% of their value. I mean, what did things cost 100 years ago, right, compared to what they cost today? And it wasn't always that way. If we were alive in 1900 and we were looking back at what things cost in 1800, everything was more expensive in 1800. The consumer price index in the United States basically was cut in half between 1800 and 1900. Things cost twice as much in 1800 as they did in 1900. So inflation is not a permanent way of life. When you're on a gold standard, when you have real money, prices come down. Money holds its value. It's only when you have a fiat system that you have inflation. Yeah. And what I'm talking about is condensing 100 years of price increases to a much shorter time frame. Maybe we experience that over a 5 or 10 year time frame instead of a 100-year time frame.
Yeah. Yeah. What do you think about silver?
Well, in fact, I've been commenting on my podcast the recent relative strength that we've finally seen in silver, relative to gold and in absolute terms. So I think silver may have found a bottom. And if we're heading into another bull market in gold and silver, if history is any guide, silver is going to outperform gold. Doesn't mean it's going to do it again just because it's done it in the past. But, I think it's a pretty good indicator that you're going to see an even bigger move. So if gold prices go to 5 or 10,000, the percentage gain in silver is likely to be much greater.
Okay. Do you think we are just at the start of the commodity super cycle?
Because it may have started around 2000, and we've had, some pullbacks, big busts, boom. But yeah, I mean, I think we're still early in where we're ultimately going because I think the world has dramatically underinvested in all those industries. They haven't had the capital to expand. And, you're seeing the evidence of that now, play out. Yeah. And so we're going to have to make major investments in increasing supply of a lot of raw materials. And it's going to take time to bring that capacity on stream. Yeah. True. And if I'm right about the dollar collapsing and emerging market currencies rising, there are a lot more people in the emerging markets than there are Americans. Yeah. And so when the dollar goes down and other currencies go up and you see a big surge in consumption in places like China and in India, that's a lot of people buying a lot of stuff. And we don't have the stuff, so prices are going to go way up for the stuff that everybody is going to be buying when they now have more purchasing power.
Yeah. What's your other favorite commodity? Yeah, exactly. Other than precious metals.
If it's an agricultural commodity, if it's another industrial metal, or energy. I mean, look, I don't know, which commodities are necessarily going to do the best. And there's so many different individual metals that you could look at. A lot of people look at like uranium and they think, that's going to be a big thing with nuclear power. Look, I just know commodities as a group are going to go much higher. Okay. I don't know which one ultimately will gain the most. I think that it's going to be the paper assets that have the most to lose. And a lot of these extremely high multiple companies, money-losing tech companies, cryptocurrencies, blockchain, all these companies that have been born in the last few years on a speculative mania, they're all going to die when the mania dies. And, old school fundamentals are going to come back in fashion, and the world is going to be investing in a different mindset. I mean, right now, everybody has been drunk on the cheap money that has been poured by the global central banks. And so people haven't been thinking straight. Their judgment has been clouded. They've made a lot of foolish decisions. When they sober up, they're going to regret those decisions, and they're going to make sounder ones.
Yeah. So value over growth. It's the motto. So what do you prefer, beer or wine?
The time of the day or what I've been doing.
In the morning, beer, and in the afternoon, wine.
Sweating and I'm really thirsty. I'd like a cold beer. But
all right,
but later on at a cocktail party, I would typically take wine or something, a hard alcohol. So I'm not a big beer drinker unless I'm thirsty and hot. Then I like it.
Okay. Perfect. Coffee or tea?
I drink more tea. I've got tea in this cup right now. I've been sipping the tea.
Nice. Iced tea, or what is it?
Coffee too. I mean,
all right.
They actually grow some decent coffee here in Puerto Rico. But
yeah, definitely.
Yeah, no, but I'm not one of those people. I don't have to drink coffee in the morning to get going. I'm not an addict to caffeine. So I drink coffee, because I like the taste, but I don't drink it every morning. And I mean, there are weeks that go by I don't even have any coffee.
Okay.
But I do enjoy it. But I do end up drinking more tea just for my throat and.
It's healthy. It's good.
Yeah.
Stay hydrated. Yeah. So my last question has nothing to do with Bitcoin Gold or financial markets. So what is the meaning of life for Peter Schiff?
I don't know what the meaning of life is. I've been having a lot of stress in my life recently, but I mean, I'm sure the meaning of life is more, to enjoy yourself and your family and to try to be happy in life. And a lot of people derive happiness from all sorts of different venues. Some people maybe derive it through accomplishment, success. Some people maybe value it for other reasons. But I think at the end of the day, that's you need to enjoy your life because that may be all you have. And in the scheme of things, it's a very short period of time where each one of us is here on this earth.
Exactly.
And, so we have to make the most of it. I had a business partner who had a heart attack and died at 64 last week.
Wow.
And so, and so, you start to think that, I mean, I'm 59. I'm not that much younger. And I have young kids, too. So I was remarried. And so I have a 9-year-old and a 6-year-old at 59. But, yeah, I mean, people beyond all the investments and economics, at the end of the day, those are the things that are very important, and we have to not lose sight of that. But personally, I mean, I really would like to make a difference, and be helpful in getting the world back on the right track. I mean, particularly the United States, but to the extent that I can help in other parts of the world. I mean, I know that there is so much potential in the world if it could be released from government and the shackles of government and the ignorance of people in their belief in the power of government and their lack of understanding of the power of freedom and individual liberty, and to get people to understand how much better life can be for everybody, how much higher everybody's standard of living could be if we just reject these principles of socialism or statism, whatever you're going to try it. These failed economic systems remain popular, and it's amazing that they're still popular in Europe. I mean, look at the examples of the Soviet Union in Europe, or look at Germany and the fascism in Germany. And people forget fascism is socialism. It's not like some opposite of capitalism. Opposite of communism. Communism and fascism are both forms of socialism. That's what they are. And they don't work. They are economic failures. What works is freedom, individual liberty. Every country in Europe, to the extent that it's freer, is more prosperous. There is a inverse correlation between the amount of government and prosperity. The more government you have, the less prosperity you have. And
True.
the less government you have, the more prosperity, because less government means more freedom. And free people are prosperous. And people have to understand capitalism and why it works, and the invisible hand, and why government doesn't work, and redistribution and welfare states and all this stuff. Yes, it all sounds great, but in practice, it's horrible. And so I'm doing what I can to educate people to understand this, so that hopefully future generations won't repeat these mistakes that our generation has made.
Yeah.
And, you know, not just my generation, but some of the generations that have followed. I mean, here in the United States, it's never been worse. You know, socialism has never been so highly regarded as an acceptable economic system.
Same here in Europe, same here in Germany. It's horrible, and people say go woke, go broke, and socialism is very trendy again, and the politicians just loving it.
Gives them power. I mean, that's what they want.
Yeah,
They want
exactly.
power.
And citizens who are dependent from the government.
Votes. You make somebody dependent on you, and then you can count on their vote.
Exactly.
Right? I always quote Harry Brown, who passed away years ago, but he was an American. He ran for president as a libertarian one time, actually against my father. My father ran in the same one of the times he ran, but in the primary. But one of his quotes, and I always attribute it to Harry. Maybe he learned it from someone else. I'm really not sure. But he said the government is great at crippling you and then handing you a crutch and saying, you see, without me you couldn't walk. And that's what government does. They cripple you, and then they offer you some kind of help.
Yeah.
But I would rather people not be crippled by government. Don't fall for it. You know, we need to be liberated from government so you can walk without a crutch.
And that's why you make a difference, and how you influence people and make people think. And you influenced me, definitely. I started way back then, before Lehman, to have a look at the Austrian economics, and it helped me to understand the fiat scam. So thank you very much for your work, actually, and you are absolutely legend in precious metals, and you have great insights, and it's great always talking to you, and I think the people will just like it. If you guys like the interview, please share it widely, thumbs up, leave a comment, and of course leave a subscription here. And Peter, thank you very much for everything you did so far. So you definitely did a difference already, so you can look back on your life and say, okay, I achieved something, I made people think.
Hopefully they act. They actually take action based on what they learn. And I think, my podcast, if people start listening to my podcast and kind of getting other people to listen to it, one of the things I do well on my podcast is I have a good way of explaining complex things, or things that people think are complex, but putting them in very simple terms so that people really understand the points that I'm making. And then it's easy to share those points with your friends, or help your friends. If you have some friends who are very liberal, and you've kind of, been banging your head against a brick wall almost, trying to get them to see the light, maybe if you get them to listen to my podcast, I may be able to succeed where you failed, because maybe some of the points I'm making will resonate. It's based on the way that I make them, and the analogies that I use to explain them. A lot of times people see the light. I get emails all the time from people who were socialists and now are not, because of being exposed to me. And it's usually not just me. I mean, I kind of put them in the right direction, and then they do some of their own research, and they educate themselves, and they grow up. They learn. And so it's important. And with the internet, I mean, this is a tool we didn't have in the past, where we can really reach all over the world and get information to people that in the past they would have had no access to.
Exactly. That's the magic of the internet. And that's why German people will now listen to your show and follow you on Twitter. I will put all the links in the description beneath the video. So I hope we speak soon again. It was a pleasure. It was an honor, definitely, having you on my show for the first time on a German speaking channel. And it was a pleasure talking to you, and hope to do it again soon. Peter, thank you very much for your time and for your insights. Take care. Ja, man muss Peter Schiff auf jeden Fall zugutehalten, dass er das Geldsystem verstanden hat. Und ich möchte es euch nochmal sagen, es ist essentiell, das Geldsystem zu verstehen. Schaut euch gerne auch dazu dieses Video an, wie Geld entsteht. Denn Wir alle haben tagtäglich mit Geld zu tun, aber kaum einer weiß, wie unser Finanzsystem, wie unser Geldsystem de facto eigentlich funktioniert. Und auch wenn Peter noch einiges an Nachholbedarf in Sachen Bitcoin hat, so deckt sich doch vieles mit der Meinung im Bitcoin-Space. Man kämpft für Sound Money, für das sichere, für das stabile Geldsystem. Und Gold und Bitcoin gehen da für mich auf jeden Fall Hand in Hand, weil sie beide limitiert sind, weil sie dezentral sind, kein Ausfallrisiko haben und so weiter. Für mich ist Bitcoin ja tatsächlich der kleine Bruder vom Gold, der jetzt aber exponentiell wächst, weil er noch in Teenagerjahren ist und sogar einige Vorteile gegenüber seinem großen Bruder Gold hat. Und genauso wie Peter es sieht, dass die Notenbankpolitik lediglich dazu da war, eine Art Insolvenzverschleppung voranzutreiben und die Fehler im System zu übertünchen und sich teuer Zeit zu erkaufen, so sehe ich das natürlich genauso. Und das völlig willkürliche 2% Inflationsziel der Notenbanken generell war natürlich nur ein Vorwand, um weiterhin Geld zu drucken und die Zinsen zu senken und damit die inkompetenten Regierungen weiter zu finanzieren. Und auch bei folgendem Punkt sind wir Brüder im Geiste, nämlich, dass sich die expansive Geldpolitik irgendwann auf die Konsumentenpreise auswirken würde und das ist ja jetzt de facto passiert. Wir haben 10% in der Eurozone und über 8% in den USA. Gut, Tendenz ist jetzt wieder sinkend, aber es werden Inflationswellen bleiben. Und laut Peters Prognose steht uns das Schlimmste noch bevor. Seiner Ansicht nach werden die Zinsen in der Eurozone weiter steigen. Damit wird auch der Euro stärker, der Dollar wird ein bisschen abschwächeln und das wird dann natürlich wieder zu einer Abmilderung in der Inflation sorgen in der Eurozone, weil wir dann nicht mehr die Inflation aus den USA uns sozusagen reinholen durch den starken Dollar, weil die Rohstoffe nun mal in Dollar gehandelt werden. Seiner Ansicht nach ist das dann ein Wettrennen zwischen den totgeweihten Währungen, weil alle in Kaufkraft natürlich verlieren werden gegen stabile Werte wie zum Beispiel Gold und er ist ja ein alter Goldbug. Und dahingehend sind wir uns auch in Sachen Geldsystem, Fiat-Geldsystem, aber auch Euro-Experiment einig. Der Euro wird über kurz oder lang einfach scheitern, so wie alle Währungsunionen der Vergangenheit immer. Auch dazu habe ich ein schönes, spannendes Video, gerne hier anschauen. Wenn euch das Interview gefallen hat, lasst bitte jetzt schon ein Abo da. Aktiviert die Glocke, dann werdet ihr immer zeitnah informiert, sobald irgendwie ein Interview oder ein Video mit mir online geht und folgt natürlich gerne auch auf Twitter, Instagram und Co. Alle notwendigen Links findet ihr unten, auch zum kostenlosen Newsletter. Aber durch die weiter steigenden Zinsen in der Eurozone wird es natürlich weiter zu Problemen kommen, werden die Kollateralschäden immer größer, weil hochverschuldete Staaten wie Italien, Griechenland oder Spanien natürlich immer mehr in die Bredouille geraten werden. Und dann wird so ein Abwärtsmechanismus in Gang gesetzt, dass dann natürlich die Notenbank wieder eingreifen muss, um diese maroden Länder zu retten mit unseren Steuergeldern, mit Aufkaufprogrammen oder halt dann auch wieder mit Zinssenkungen. Seiner Ansicht nach werden dann Länder ausscheiden, was de facto eigentlich natürlich gut wäre, auch für Deutschland. Und genauso wie ich sieht er dann auch am Ende dieses Spiels eine Restrukturierung der Schulden, eine Restrukturierung des Geldsystems, was ja immer in den Zyklen passiert, wenn die Überschuldung überhand nimmt, dass dann irgendwann der Schuldenschnitt kommt oder die Währungsreform bzw. die Hyperinflation. Auch das sind Zyklen, die ich ja in meinem letzten Buch Die größte Chance aller Zeiten beschrieben habe. Und ihr wisst ja, dass ich denke, dass wir im monetären Endspiel sind und auch Peter denkt das, dass wir jetzt nur noch wenige Monate oder Jahre haben, in dem man das Finanzsystem stabil halten kann. Und die Aktionen der Notenbanken, der Politik werden ja immer desperater. Die Volumen der Bankbilanzen steigt, der Notenbankbilanzen natürlich und dahingehend auch der Aktionismus der Notenbankpolitiker, die ganz schnell auch sich ändern können, wenn irgendwas passiert in der Nacht- und Nebelaktion. Ebenso einer Meinung sind wir auch bei der Weltreservewährung US-Dollar. Auch da sagt er, der US-Dollar ist angezählt. Wie ihr wisst, habe ich die Meinung ja schon länger, dass wir das Ende von Pax Americana erleben. Nochmal ein letztes Aufbäumen. Natürlich wird die amerikanische Notenbank dieses Privileg nicht kampflos aufgeben. Und sein Szenario ist, dass der Markt den Pivot antizipieren wird. Daraufhin wird der Dollar Richtung Süden abrauschen und der Goldpreis wird nach oben katapultiert werden. Die Anleihen werden erst eine Rallye erleben und dann massiv abstürzen, da die US-Regierung natürlich exorbitant verschuldet ist mit über 31 Billionen Dollar oder über 130% zum BIP. Und in der Vergangenheit war es immer so, dass Länder mit über 130% Schulden zum BIP de facto gescheitert sind und ihr Finanzsystem, ihr Geldsystem restrukturieren mussten. Und wenn wir dann einen Pivot haben Richtung QE, Quantitative Easing, also lockerer Geldpolitik, expansiver Geldpolitik, dann werden wir die Inflation wieder anheizen und den Dollar wieder schwächen. Und die Fed hat laut ihm also die Wahl zwischen den Bondmarkt retten oder den Dollar retten. Beides zusammen geht nicht. Peter hofft, dass wir keine neue Weltwährung bekommen, sondern dass Gold diese Rolle übernehmen wird. Aber das Fiat-Geldsystem, das Fiat-Betrugssystem, so wie ich es nenne, wird zu Ende kommen. Ja, und zum Thema Bitcoin kennen wir de facto alle seine Meinung dazu, nämlich, dass er denkt, das ist die größte Blase aller Zeiten. Auch dazu habe ich in meinem letzten Buch ein ganzes Kapitel geschrieben, warum es nicht mit der Tulpenmanie im 17. Jahrhundert vergleichbar ist. Er sagt nämlich, dass Bitcoin kein digitales Gold ist, es ist rein spekulativ und hat keine Fiat-Währung ersetzt. Im Gegensatz zu Gold, welches zum Beispiel auch industrielle Anwendungen hat, hat Bitcoin keinen Nutzen und ist daher kein Wertspeicher. Daher sieht er Bitcoin nicht als Risiko für das Finanzsystem. Gold ist definitiv die bessere Position, die bessere Option, um seine Kaufkraft zu schützen. Interessanterweise plädiert er auf der anderen Seite doch für die Blockchain-Technologie, um Gold besser zu machen, nämlich Stichwort Gold-Tokens. Als ich ihn darauf angesprochen habe, ob er es als kritisch betrachtet, dass man hier wiederum zentralen Instanzen vertrauen müsse, so wie ja bei den Notenbanken aktuell, entgegnete er, dass diese ja von ihrer Reputation leben und wenn sie im freien Wettbewerb das Vertrauen missbrauchen würden, dann bedeutet dies das Ausscheiden aus dem Markt. Was meinst du dazu? Schreibt mal euer Kommentar bitte unten rein, das würde mich tatsächlich interessieren, ob ich da einen Denkfehler habe oder ob Peter da falsch liegt. Ich persönlich denke nämlich, dass Bitcoin durch seine dezentrale Struktur dem Fiat-Geldsystem massiv überlegen ist. In einer Sache waren wir uns aber natürlich einig, nämlich Shitcoin bleibt Shitcoin. Was waren jetzt Peters Portfolio-Empfehlungen? Wie solltest du dein Geld anlegen? Seine Ausgangsthese ist ja eine lang anhaltende hohe Inflation gepaart mit hohen Zinsen. Und daher bevorzugt er jetzt Value-Aktien genauso wie ich. Ich habe ja vor über einem Jahr gesagt, dass Value-Aktien, Growth-Aktien definitiv schlagen werden. Das ist ja auch passiert. Die Tech-Aktien sind stark abgestraft worden, haben stark an Wert verloren und die Value-Aktien waren relativ stabil in den letzten Monaten. Und aus dem Grund favorisiert er momentan auch Unternehmen, die jetzt schon gutes Geld verdienen. Vorzugsweise natürlich mit hohen Dividenden. Er hat ein Faible für Unternehmen, die auch eine Pricing-Power haben, also die einen höheren Preis am Markt auch durchdrücken können. Und das trotz hoher Inflation, die Leute trotzdem dann diese Preise auch bezahlen. Er empfiehlt eine Übergewichtung in Emerging Markets, also in Schwellenländern und dann natürlich in Rohstoffen und Gold- und Silberaktien. Und selbstverständlich sieht der Goldbug Peter Schiff einen Gold-Bullenmarkt auf uns zukommen, geht aber auch davon aus, dass Silber Gold outperformen wird. Und ich hatte ja vor einiger Zeit ein sehr populäres Video zum Auswandern gemacht, das findet ihr hier unbedingt anschauen. Und Peter Schiff ist ja ausgewandert nach Puerto Rico und dann habe ich natürlich gefragt, ob er uns Puerto Rico als Auswanderungsziel ans Herz legen kann. Allerdings empfiehlt er uns Deutschen nicht, nach Puerto Rico auszuwandern, da gäbe es aus steuerlicher Sicht viel bessere Plätze auf der Erde. Es ist nämlich lediglich für US-Amerikaner interessant, aus steuerlichen Gründen nach Puerto Rico auszuwandern, da man als Amerikaner nicht die US-amerikanische Einkommensteuer dort zahlen muss. Ja, und dann natürlich haben wir noch gesprochen über die COMEX. Und er sieht bei der COMEX tatsächlich die Gefahr, dass die COMEX, die amerikanische Rohstoffbörse, irgendwann implodieren wird. Viele gehen ja davon aus, dass genau an dieser Börse der Preis für Edelmetalle zum Beispiel seit Jahren manipuliert wird. Und Peter glaubt, dass hier irgendwann die COMEX nicht mehr liefern kann. Wenn die Shorts also irgendwann im Zugzwang kämen und liefern müssten, wird es einen riesigen Run auf physisches Gold geben. Ein ähnliches Szenario wie damals in den 80ern bei den Hunt Brothers für Silber. Am Ende plädiert natürlich Peter für mehr Freiheit. Das kann ich nur unterstützen und unterstreichen. Er sieht durch die letzten Jahre, dass wir immer mehr in die Unfreiheit gezwängt werden, dass der Staat immer übergriffiger wird und dass wir unsere individuelle Freiheit, unsere Demokratie verteidigen und rückerobern müssen. Wie fandest du das Gespräch mit Peter? Soll ich ihn nochmal einladen? Was sagst du zu seinen Punkten, zu seiner Argumentation? Mich würde es natürlich freuen, wenn ihr das Video weiterempfehlt, wenn ihr ein Abo dalasst, die Glocke aktiviert und natürlich einen Daumen nach oben gebt. Und damit freue ich mich über euer Feedback und wünsche euch alles Gute. Und denkt immer daran, wegen dem Austausch, wegen unterschiedlicher Meinungen, wegen des Pluralismus ist die Welt da draußen besser, als wir immer glauben. Herzlichst, euer Marc.